So I'll say good morning, good afternoon, or good evening, depending on where in the world you're signing in from. I think almost every time zone is represented in today's audience. There are quite a few of you, so really thank you so much for joining us. I couldn't be more excited to have with me today Rick Van Nuys, the CEO of Contango Silver and Gold, and Sean Kunkun, the company's president. Gentlemen, how are you today?
Excellent. Just excited to get going here.
Awesome. And as we go through what I always describe as the most boring part of a webinar, where I tell you what's going on, you can also look at Contango's fancy new branding. So I'll throw that up while I do this. A couple things I wanted to talk about today. There are a lot of questions that came in already. So that chat button at the bottom of your screen, we are in interactive events. Please do ask questions during today's event. I will try to get to as many as I can, but I warn you, there is no way we will get to every question that was asked. So if your question does not come up that you submitted over email or that you submit in chat, I will be sending it to the Contango Silver and Gold team, so they'll be able to tackle it afterwards. But I am going to try to get to all the most popular ones, or certainly the ones that seem biggest for everybody who's already submitted and is going to submit them during the event. I'll also say today's event is being recorded and will be available for replay quite soon after the event. I'd say probably by 3 p.m. Eastern. It'll pop up both in your email if you're here in the room, but it'll also be on Six's YouTube page, so you can share it from there. But I think that's it for the boring stuff, so I do want to get right into the exciting stuff that we're here to talk about. That is, congratulations, both of you, getting this across the finish line and introducing the new brand. I know shareholders on both sides voted overwhelmingly in favor. Now the lawyers are through all the lawyery stuff that I'm sure was fun for you guys to read emails about. But now the Contango Silver and Gold is a done deal. What is the first thing investors should expect to hear from the combined company? And what does the 2026 game plan look like right from day one? Rick, I'll throw it to you first.
Sure. Well, there's a lot going on, and yeah, we're pleased to get this done. It's been a tough market, obviously. I'm sure we'll talk about that some more. I think the first sort of milestone thing that will come out here is an MRE, a mineral resource estimate on Kitsault. There's been on the order of 200,000 meters of drilling since the last MRE that came out. So we're expecting to have that completed by the end of the quarter, next quarter, June timeframe. They're working on it now, and I think it'll be some exciting milestone. And from there, we've got a 40,000 meter drill program planned for this year, and the mineral resource estimate will sort of help guide how much new exploration is being done, how much infill and expansion of the existing resource will be done. So it's an important document, not only from a milestone standpoint, an investor standpoint, but also from a planning standpoint. So that'll be the first thing, and obviously we're drilling at Lucky Shot, so we'll have more results out from there. We continue to permit at Johnson Track. We're getting everything set up to start building the road there. So it's going to be a busy year. I think we're going to spend on the order of $50 million. So there's a lot going on. We had our first big all hands on deck team meeting earlier this week, and we're organized and we're set to go.
Exciting. Sean, I'll get you in there for what people can expect from Contango Silver and Gold with the new management structure, with the new team just going forward into this year.
Yeah, look, listen, I think for the investor, what they have now is they have a new go-to name in the precious metals arena. For investors that care about safety, security, that celebrate grade. The last 15, 16 years in the precious metals arena has been very, very difficult. Up until just the last, say, 6 months or so, it's been a very depressed environment. And for those who have survived and thrived, Contango and Dolly Varden, were the exception in the industry. And the strong survive and thrive now that the market's turned and projects are becoming very, very economic. So what investors have to look forward to is a new entry, a company that has the ambition to become a mid-tier producer focused on precious metals in North America. I think what's unique about this company is, in addition to having Manh Choh is a very special project. It's one of the highest grade open pit gold mines on the planet, and it's located in safe Alaska. And then, you've got Lucky Shot. There's a new discovery that was made and announced in February, and an ongoing drilling there. And that's a project that's permitted, high grade, and could be back in production very, very soon, as early as 2028. So you've got the Manh Choh production it's going to have a record year here next year. Company is well funded. We're doing, boring but important work at Johnson Tract. And then from a growth perspective, what excites me is, as Rick said, we're spending about $50 million on enhancing this portfolio, and a lot of that is going into exploration. And if you look back at the company's history, going back 5 or 6 years, we've been up there in the top 10 drill results in the industry in both silver and gold. So having call it a 50,000 meter exploration budget across the portfolio, it's going to generate a lot of those types of results that's garnered that growth. So it's exciting. I think we really are going to attract the investor who celebrates, good balance sheet, strong cash flow. That's the differentiator. You've got a sea of juniors that they don't have the funding to advance. They're relying on share issuances and dilution. So we've got the cash flow, we've got the treasury, we've got the pipeline and the growth. So it's what I'm really excited about. My skill set coming into this is marketing. I've been marketing companies. I've raised billions of dollars for companies in the last couple of decades. I worked with one of the most famous and legendary mining finance peers on the planet, Frank Giustra, and I've learned from him over the last 4 years. So what I'm excited about is Contango moving into the Fiore office, being one of the foundational companies, the largest market cap cos here, and working with Rick and his team and Mike Clark to share the value proposition. And again, I just think we're in an environment here. I don't think we've ever been in a time in history where you've got the governments at the federal level in the U.S., at the federal level with the Carney administration. We've got projects. I could speak on the Canadian side of the border here. This is the most important mining jurisdiction in Canada, from the density of mines, from the infrastructure, from First Nations, and Rick's experience, track record. It's really exciting. So looking forward to hit the road here in the first quarter and share that message.
Awesome. Appreciate it. Do love the perspective, the grit it took to get through the last couple of years. People forget I didn't see a single smile at Beaver Creek for 4 years. So people forget how tough it was to get through some of these. But there is a question I want to ask because this is on everybody's mind. It's already come up in the chat. I know people asked about it. I want to zoom out and talk about the market and the stock price for a second because obviously people do ask questions. Gold pulled back from highs well over 5,000 to today. Last I checked, just under 4,400. Silver corrected from all the way in the 110s down to today. Under 70. I know a lot of this, we don't have an end Middle Eastern wars button as much as we'd like to, but I'd love to ask, and Rick, I can start with you here. What advice can you give for investors relative to Contango Silver and Gold's future about the market?
Yeah, look, I've always said gold's an emotional metal, and I think silver, in that vein, silver is a drama queen. It's just more volatile. It has it identifies itself. It has a catastrophe. It's like, I don't know if I'm an industrial metal. I don't know if I'm precious. So that's just the environment we're in. And something like the Iran war happens, everybody goes to the dollar. That's where the big money goes. The index money goes. Okay, I'm not sure what's going on. I'm not sure how this is going to affect my investment portfolio. I'm just going to go to the dollar. And so the dollar strengthens, the metals retreat, and it's been dramatic. I mean, the metals are down. I think gold is down, 20+%. Silver is down. If you want to take the peak to trough, it's down almost 50%. So yeah, it's been dramatic. When Agnico Eagle and Newmont are all down, 30%. Of course, we're going to be down, and it's a tough environment to get a merger done in. Just not because of the work's the same, but watching your share price go down, you're like, okay, well, this isn't fun. But what you have to do is look at the long term. What are we building here? Why are you investing in gold? You're investing in gold for the future. You're investing in silver for the future, not for today. And that's the company we're building. Is a company that's looking forward. I mean, that's exactly what Contango means. That's the future, the delta between the present price and the future price. And so we're building a company for the future. We've got a great portfolio. We've got cash flow. We're starting with lots of cash. We've got $100 million US in the bank over, and we're generating on average $100 million of free cash flow from Manh Choh. So we've worked our way through the hedge book. We've paid off most of our debt. So we're poised for growth. And the gold and silver market's going to do what they're going to do. We have zero control over what's happening in the Middle East. What we can control is our budgets, and we can spend money prudently and make sure that we're investing that money to get a return for shareholders in the future.
Appreciate it, Sean. I will throw it to you for your perspective on just current markets and the share price change.
Yeah, absolutely. Well, I think, I like to be solution oriented, right? And learn from the past. If you go back to two recent crises, 2020, 2008, in both instances, gold sold off. It initially sold off. You go back to 2008, it was $1,000. It went to $680. And we're seeing the same thing happen here, as Rick said, in a time of crisis, you go to things that you can sell, that you have liquidity. We're in a world right now where there's record debt levels, the cost of carrying, they've got economic slowdowns. So gold is one of the few liquid assets that you can go to and get liquidity during a time of crisis. And so, what I focus on though, Romeo, is you look at Manh Choh. Mm-hmm. That was built when gold was sub $2,000 an ounce, right? It was built when you were really modeling, $1,400, $1,500 gold environment. And if you think about the all-in sustaining cost throughout the life of mine, whether gold is $3,000, $4,000, $4,500, $5,000, it's a very, very profitable operation. And I think, one thing that I've learned as, Rick and I have known each other for a while, but we've really got to know each other well the last 6 months. And he's reminded me something that's resonated throughout my entire career. Grade is king. Our whole differentiator here, in addition to the cash flow and the location, is the grade. We've got some of the highest grade gold and silver projects anywhere on the planet. And so I think for the investor, and I know for myself, successful precious metals investors are contrarians. You've got to buy when you're scared, right? And if you look at this opportunity right now, the company was valued at twice what it is today, just 2 months ago. Now, what's changed? What's changed is that certainty of the merger is out of the way. And if you study mergers, you look at Equinox Calibre as the most recent example, they underperformed as they were merging. But as soon as they completed their merger, they were revalued. So I think that's the opportunity here, and I think the investors should take advantage of that.
Awesome. Appreciate it. It's important for people to remember, have a longer memory with gold price. I remember, Rick, we were on a conversation 2 years ago, and somebody whispered 2,400, and it made the room go silent. It was such a scarily high number. The times do change. But I do want to talk about Manh Choh. And Rick, I'll throw this one to you, because I know deck on your website right now modeled Manh Choh economics at 3,200 gold. So even after the pullback we've seen, we're still sitting at 4,375 as of today, or 4,380, somewhere in there. That's still a pretty big windfall above the base case. So how does that change the math for Manh Choh on both life of mine, free cash flow, and does it accelerate any development timelines for that kind of growing arsenal of strong Contango projects that you got?
Yeah, no, it really just underpins, the cash flow. This year's our guidance. This has always been the low year of production for Manh Choh and the highest cost, because we're transitioning from the north pit to the south pit. So there's a lot of pre-stripping and stripping to do to get down to the ore at the south pit. So we're guiding 45,000 ounces of gold equivalent. It is mostly gold, and at a cost of $1,900 to $2,000. So relatively high cost in the overall mine life. We get the benefit of that next year, because we're guiding 75,000 to 80,000 ounces of production at $1,400 cash all-in sustaining cost. So on average, it's going to average 60,000 ounces, like we've always said and always guided. And on average, next year, the cash flows are going to be ridiculous. They're going to be a couple $100 million at today's gold prices. So, bottom line, we're going to be, the Manh Choh operation is managed and operated by Kinross, large company. They're going to remain conservative on their assumptions. That's good for us. That keeps us, on the straight and narrow, so to speak. We're not, going to be talking wild stuff. But it's a constant, nice cash flow. And so this year, I think we have about $50 million of free cash flow at the guidance that we're giving. I think you'll see our website updated here shortly, and I think we're using 3,700 now for our guidance in terms of free cash flow. And our base case has gone from 3,200 now up to 37. And so, yeah, I mean, it's just it's unusual in the business to have that sort of nice cash flow generating machine. And we're going to spend about $50 million in exploration on all the projects this year. And so we're going to make about $50 million from Manh Choh. And we've got over $100 million in the bank. So this is a well-capitalized company. And we're going to spend our money. We're not going to be foolish about this. We're going to be very disciplined in how we spend our money. We do want to advance the projects. And so we have a very specific plan to execute. But I'm confident we can execute because we've got the team to do that. And we had our first organizational, all hands on deck organizational meeting earlier this week. And I don't know, I think everybody's just like raring to go. So exciting times.
That's great. Like I always say, everybody loves when Mike Clark gets a check. It's always good news day for everybody. Sean, I'll ask you a question. And I only ask this because there are some new folks in the room that are new to both stories. Because got the advantage of already knowing that an overwhelming number of Dolly Varden shareholders agree with the opinion you're about to give. But I'm curious, for those who are in the room, walk us through why merging into a producing company was the right path versus continuing to develop Kitsault as a standalone. What does this platform that Rick just talked about give you that didn't have on your own?
Well, I moved Dolly Varden into the Fiore office about 4 years ago. And, working alongside Frank Giustra, I got to know something that Frank describes as the buy and build strategy. And it's a strategy where you diversify into multi-assets. You're not just focused on one asset company. And it's a strategy that's worked for entrepreneurs from Pierre Lassonde to Ross Beatty to Robert Friedland to Frank Giustra. And so, as much as I believe in the Kitsault Valley, it's a district. We have 100,000 hectares. We have 5 past producing high-grade silver mines, richest silver mine in the British Empire, Canada's 3rd largest silver producer. It's, the number 1 jurisdiction in Canada. Getting exposure to neighboring Alaska, the cash flow, the pipeline. But I think what put it over the line for me is the team. And it was Rick. It was Rick. It was Mike. It was Bonnie. It was, and that expertise, if you go back to 2020, we were in a lockdown. We were in a pandemic. If you go back and study Manh Choh, that's exactly when the feasibility came out, and I think it was 2021. And in that environment, a very difficult, challenging environment where you had massive inflation, a lot of uncertainty, within a 2.5-year period, they were producing. In 2024, I think there was 42,000 ounces of production. So to be able to navigate that, and Contango is one example of Rick's expertise. I can look at Trilogy, Nova Gold, and so partnering with an experienced management team that could take the Kitsault Valley, which our group of explorers have done a phenomenal job growing, expanding. I brought the capital. We've done a number of M&A transactions that were wildly accretive, but be able to now develop, permit, turn back into production, that's a skill set that we welcome from the Contango side.
Oh, amazing. Appreciate that answer. Rick, I'm going to zoom in on Johnson Tract for a second because I know we've brought up a couple times. I just want to really get into that project. Because I know the initial assessment came out in May, that post-tax MPV, $224 million, 30% IRR. That was using 2,200 gold. A fantastical number we haven't heard in a long time. Gold has today doubled that number at 4,400. And the sensitivity analysis barely even covers it. It's not even, doesn't even get to those numbers. So can you paint the picture of what Johnson Tract economics actually look like in, we'll call it today's price environment?
Yeah, well, actually, I think technically we can't talk about it because it's not in our SK 1300. We were able to convince our QPs that we should put a $4,000 gold price in there. So, according to the security regulations, I'm not supposed to talk about a bigger number, but yeah, that was, supposedly back then being wildly optimistic that we put a $4,000 number in there. The NPV of the project is well over $600 million. What I really like about, it doesn't matter whether it's a $3,000, $4,000, or $2,200 gold price, it's got a 1-year payback, which is, unheard of in our business. And so this is it's a beautiful ore body, averages 40 meters wide, over 9 grams per ton gold equivalent. It's polymetallic. That's where we really see the synergies with the Kitsault Valley ores, because they're sulfide polymetallic. They're silver biased. The Johnson Tract is more of a gold rich polymetallic deposit, but they're going to be processed by the same kind of mill. And so that's where we really saw the big synergies there. And that's where, we can see our growth profile from Manh Choh, add Lucky Shot, 50,000 ounces, add Johnson Tract and Kitsault, and they're producing over 100,000 ounces of gold and 5 to 10 million ounces of silver. So, it's a hell of a portfolio. And, right now we're permitting Johnson Tract. We're part of the Fast 41 dashboard. We finally have an administration that not only recognizes that, metals are critical and that we have a whole class of metals called critical metals now, but they're actively, proactively saying, okay, we want mining. We're going to help get more mines permitted. And that's the objective of Fast 41. Fast 41 started under Obama. It was Fix America's Surface Transportation Act. So it's not something invented by the Trump administration, but the Trump administration sees it as a priority to get more mines producing more metal. So, it's great to have both a state and a federal government now solidly behind mining projects.
I appreciate that. And Sean, I'm going to jump to you for Kitsault updates. I know the Wolf vein keeps delivering pretty crazy numbers. 1,422 grams per ton silver over 21 meters, with 10,700 grams per ton over a meter in the latest step-out holes. You got an updated resource coming, Q2 2026, I believe. What should investors be expecting? There's a lot of them in the room today from that update. And how will that feed into the path towards the PEA at Kitsault?
Yeah, I think one thing I want to start with is this is just a point in time, right? Like this resource, it's gonna be, I think, a significant improvement in growth on the silver side. The guidance I've given previously was a 50% increase in terms of the silver ounces. On the gold side, I think you're going to see about a 50% conversion up at Homestake. So, really the way to look at the project is you have two centers of gravity. You've got the silver centric south, which is the Torbert Horizon, which makes up those two past producing mines. And then you've got the gold rich north. And in the gold rich north, 80% of the resource was inferred. And, the biggest risk or challenge a resource investor has is conversion. And I think what we saw with the drill results that we put out the last few years is we were actually surprised to the upside in terms of the grade and the consistency of the veins. Like we had identified a very wide, high grade plunge to the ore body at both Homestake Main and what we call Homestake Silver. And so I think what you'll see here is a 50% increase in the number of silver ounces, a 50% conversion on those inferred to indicated ounces. And as we move categories there, we're currently sitting on about a 4.5 gram inferred resource, whereas the indicated resource is over 7 grams. So I think you're going to see that grade, about a 50% increase to that grade as well. So, all in all, I think it's going to be a very strong resource upgrade. But the key is, we've maybe explored 2% of the property. And, Rick's described some of those silver deposits as a string of pearls. And the real opportunity on the project is there's about a 5-kilometer gap in between the Wolf vein and Homestake Silver. And I suspect, it's a structurally controlled corridor, we could fit another 3 major deposits. And so, right now the company, the project contains about 64 million ounces of silver in all categories, 1 million ounces of gold. That will be upgraded with the 200,000 meters of drilling we've done, but by no means is it going to be the be-all and end-all of the project. And I think with the 40,000 meters of drilling that we've got, that's going to kick off here in the spring. We're going to, some of that will be growth oriented, and we had some big results last year where we drilled on the other side of faults. We saw mineralization 20 kilometers away from known resources. We got a big land package, and we're investing a lot of dollars into that continued growth.
Awesome. No, it's an exciting 5 kilometers, so it's fun to see what comes next. Now, Rick, one thing I want to ask you, because I know there's a lot of Dolly shareholders in the room and also new people to the story. The direct ship ore model, rocks in a box, as I know you like to say, is central to a lot of what Contango does. I heard somebody call you DSO Rick at PDEC this year, which I thought was very funny. But it's not something I think a lot of investors are familiar with. So I'd love if you could break down for folks in the room why shipping ore to an existing mill is a game changer for permitting timelines, CapEx, environmental footprint, et cetera.
Yeah, I mean, it is a little different approach, and it's not that it hasn't been done before. It certainly has, and the Australians are certainly they're probably the kings and queens of the DSO model and central hub and spoke central milling concept. We just happened to be able to take advantage of it with Manh Choh because it was high grade, and we looked at the fact, well, we could build our own mill and tailings facility, but it would cost a lot of money, and for a junior company raising $500 or $600 million to build a new mill, one, it's a lot of capital, but two, it's a lot of time. And that Lassonde curve just smacks you right in the face again because you've got to do the boring stuff to be able to build a mill and a tailings facility. You've got to do all the engineering work. You've got to do all the permitting work, and that's a boring time for investors. And so you're on that slump side of the Lassonde curve. So the DSO model allows you to skip that. And it does require that you have grade because the offset is you're not going to spend that capital and you're not going to spend that time permitting and all that. But you have to transport your ore. So the ore's got to be good enough grade to be able to pay for the truck ride or the barge ride. And so to me, the most important part of it, the capital is a big part of it. You have a much smaller environmental footprint. So what you're permitting can be done in a reasonable amount of time. And we've demonstrated that with Manh Choh. We got that permitted in all start to finish 18 months. And I challenge any other mining project to say that, hand over heart, honestly, I got my project permitted in 18 months. We're doing that with Manh Choh. We're about ready to get our state permits, and we'll be able to go underground. We'll get the road done this year, and we'll be able to go underground and start drilling once we get that work done next year. So it's a different approach. It does require discipline in going after high grades that are close to existing infrastructure, so there's not a bunch of other infrastructure to permit. And we do find that trying to do all these things, developing a mine on private land is by far easier than trying to do it on public lands, specifically federal lands. And until there's a federal directive at permitting reform, which has to include a court reform aspect to it, until that happens, and there's movement on that, so I'm optimistic. The SPEED Act is passed Congress, and the Senate's working on their version. So when that happens, we'll relook at federal lands. But until then, we like working on state lands and private lands. But that's really the essence. It affords you to be able to skip a few important steps from a capital side and from a permitting timeline side.
No, that's great. No, appreciate it. Like I said, I know there's a lot of people in the room unfamiliar with it, so I think it's helpful. But I do want to scroll down the map from Alaska to the Golden Triangle for a second. Sean, I'll throw it to you for this one. I know the region's seen $5 billion in M&A over the past couple of years with Newmont, Seabridge, Skeena, all in the area. And I know even this pullback with $67 to $70 silver, the economics on high-grade silver deposits look way different than 2 years ago. How do you see Kitsault Valley fitting into that district? And then there's a question I'll throw to both of you. Is the combined company now an acquisition target itself? But Sean, I'll start with you.
Okay. The way I see our part of the Golden Triangle, where we've established a land position that does rival Newmont in terms of size and in terms of the density of the past producing mines that are under there. Rumi, you still with me?
I am, yep.
Okay. No, I looked like the screen had froze for a second. But really, we're in the sub-basin of the Golden Triangle. And it's an area that, despite being, having some of the best infrastructure in the Golden Triangle, it's seen the least amount of exploration. So it's really the future of the Golden Triangle as I see it. And what's interesting about it is in the center of the Golden Triangle, it's a gold-centric region, whereas the north is more copper gold. And in the south, you've got the silver and the gold. So, look, we're in an environment right now where I'll just talk about silver and silver producers. If you assume a $50 silver price and the average all-in sustaining cost of about $25, for every million ounce you mine, that's $25 million of free cash flow. So as we look at the Kitsault Valley and we look at 5-6 million ounces of silver production, it's going to be a very, very profitable mine moving forward.
Awesome. I appreciate that. And Rick, I'll throw it to you for if you think the combined company has become itself an acquisition target in the region.
Yeah, I mean, look, you can never get too wound up about that. But look, we're building a company that's going to generate a lot of free cash flow. So I'd say, yeah, that's probably a target for a bunch of people. But, we're going to focus on executing our plan. And our plan is to grow from our current 60,000 ounces of average annual production to 200,000 ounces of gold and, somewhere between 5 and 10 million ounces of silver. And that's, there's a lot of work to do, but we have the money, we have the team, and I think we have the support of the governments, which is really important as we this is the first time I can remember in a long time that we actually had supportive governments and a recognition that metals are important. They're critical now. And silver is one of the top ones on that list in terms of the big metals. So you have all the specialty metals that get all the airtime, the rare earths and what have you. They're more niche markets. But silver's, silver and even gold itself. I mean, with all this investment going into AI and data centers and battery storage and all those take a lot of gold and silver as well. And specifically silver. The solid state battery is another, estimated to be another 100 million ounces of new demand on silver. So, that's, we're just in a great spot, I think. I'm really excited about where we are. Yeah, the pullbacks is a pain. It's painful to watch. But, we're in for the long term here.
Awesome. My final run of individual project questions, and I'll zoom out a little bit. And then I promise I will get time to get to some of the questions that were sent in over email in advance. But I do want to talk about Lucky Shot. I know it's already fully permitted for mining. Rick, what gives you the confidence of the scale at Lucky Shot? And what's the realistic timeline from drilling into production?
Yeah, so I'll answer those in reverse. So our plan is to get the drilling done over the course of the remainder of this year. It'll probably move into the early part of next year, but I think by the Q1 we should be mostly wrapped up with the drilling, and then objective outline about 400,000 to 500,000 ounces of resource, and then convert have a subset of that we get converted to reserve status, and we're shooting for 250,000 ounces that can produce 50,000 ounces a year. The fact that this district, and it is a whole district, I mean, we focus on just the sort of the Lucky Shot and Coleman's, part of the vein structure there. But there's 50 other prospects that all have some workings on them. So there's a lot of gold in the district to produce a lot of placer gold or alluvial gold, which I just view as a giant soil anomaly. And the fact that we found a new vein. We announced, I think, a little over a month ago, KM vein, in a completely different orientation from the Lucky Shot vein structure. In fact, at right angles to the Lucky Shot vein structure. This is the first time that it was a new discovery. The folks who mined here back in the late 20s to the 40s, they didn't see any veins like that and never described any veins like that. And it's twice the grade of the Lucky Shot vein. So we're very excited. That's everybody loves discovery, and we've got to get the tunnel underneath it now, and we're planning to get the miners back in mid-May. Extend the west drift so we can get underneath the vein, because we set the west drift up to drill the Lucky Shot vein, which is at right angles to the KM vein. So but we're going to outsmart this Mother Nature here and just go underneath it and get some more drilling done. And that may well change our plans in terms of where we focus. I mean, if we're drilling 30 grams per ton, rather than 10 to 15 over at Lucky Shot, and guess what? We're going to adjust the plan. And the fact that it's literally right there, you can see the vein, it can take you underground and you can put your hand on it. And that's exciting. So I'm excited about the implications of what this vein orientation means, the fact that it is high grade, and the fact that we have a whole district to explore. So as I think both Sean and I have just emphasized the same thing, that we don't have 4 deposits. We have 5 districts. We're focused on the long term here again. Just keep remembering what Contango means. It's the future price, and that's what we're focused on is developing projects for the future and adding shareholder value in the future.
Awesome. Zooming out now, done with all the individual project questions. Zooming out, even after this pullback, combined companies a pro forma market cap approaching $1 billion Canadian, going to be dual listed on the NYSE American, targeting the TSX. You're already in the GDXJ, the SILJ, and the Russell. Sean, I'll throw this to you. How important is that institutional visibility right now? And with precious metals pulling back, is this an entry point for funds? How are institutions thinking about this period?
So it's a good question. I think it's everything in the world we live in today, where more money is passively managed than actively managed. I think it's very, very crucial to get into the indexes and the ETFs. Most investors can finally now buy us, right? We've gotten large enough, we've gotten liquid enough. We're going to be on the prime North American exchanges, TSX Big Board, NYSE American. So that is everything. Liquidity is the oxygen of capital markets. And, what we've seen from the time we proposed the merger to completion of merger is our liquidity profiles increased significantly. So it's very, very important. Look, I've always been taught that you make your money on the buy, not the sell. And I think that what you need to focus on right now during this correction, as gold is below the 50-day moving average, right? As we continue to go through this correction, this is a buying opportunity, right? This company is trading at half the value it was just 2 months ago. And again, I just think the discrepancy between the price of the metals and the price of the mining equities has never been further apart. And I think the big opportunity for the investor here, and if you study history, this happens every cycle. First you have the gold price move, right? And then you have the large producers move, and then that trickle down comes down. And I think what I'm most excited about 2026 is going out and being able to share a company that's now cash flowing. But I think for what we are now representing, what the Contango shareholder has been now exposed to is a longer profile, a longer mine life, right? That 5-year business is now a 20-year business. And for Dolly Varden, the uncertainty around, well, now what? When are you going to start producing? Well, we are. And we have the cash flow to get the silver off the hill. So I think for me, it's having 2 sides to the story: production and growth. It's very powerful.
Great. Rick, I know we already talked about market near the beginning of this, but I do want to lean on your decades of experience in markets just for a second and indulge me in some crystal ball gazing about the gold price. I'm just curious, your perspective, this most recent correction, is it a healthy one in an ongoing bull market? Is it just related to the war? Should investors be concerned? And then as a side question to that, how does a company like Contango Silver and Gold differ than a pure explorer in a volatile metals market? Like if it's going to be jumping up and down, how does a company like Contango fare comparatively?
Yeah, look, if you average the correction in silver and gold, it's a 30% correction. That would be described as a very healthy correction. I mean, gold and silver both moved very fast, as we talked about. Silver always is more volatile and it's more drama, but they both moved. It's a healthy correction. Nothing fundamental has changed in the gold space and in the silver space in terms of the appetite for investors in the metals. And you're still seeing the central banks buying. You're still seeing a deficit of silver from what's needed to build all the things that silver is actually used for. Because silver is that both an industrial and a precious metal, and so nothing fundamental has changed there. So I think again, if you got to take a longer term view. I think if you're investing in exploration and in mining, you're investing for the future, because that's where the return comes, and that's where if you take the dollars you're spending on exploration, and if they're wisely invested and you get additional production and additional cash flow out of it, that's the business model where you build wealth. And so the fact that we have the cash flow and we have the goods, we have the gold and the silver, and we're in a safe jurisdiction where you're not going to wake up tomorrow and your asset's going to be nationalized, or there's going to be bombs dropping on your head. We're in North America, Alaska, BC, we've got supportive governments. So all these things I think are very much lined up for our success. We've got the team, we've got the dollars to do it. For the junior explorer, it's a tougher sell. You are at the whim of the market, and if the timing had worked out that you need to raise money now to get a good drill program going this summer, well, you just diluted the crap out of your shareholders. I don't like seeing the share price down in the $17, $18 level, but I don't have to raise money now, and we're not. So we're pleased with where we are, and I think we're just going to keep focused on the future and adding value for shareholders.
Awesome. That is all my questions. Everybody who's written a question, thank you for indulging me. I'm getting into yours now, I promise. I'm going to go through some of the ones that came in over email first, and then I'll get into some of the ones that are caught in the chat. And where possible, I'll combine them. There's one straight out the gate asking about fuel prices, because obviously that's on, I think, most people's mind to some degree as oil prices do increase. The question basically is, when would you expect high fuel prices to start impacting Contango's revenue? Do you have an estimate on what that impact will be? And as a side question, are electric trucks being considered as an option in the DSO process?
Yeah, short answer is for Mont Show, no. We've got the fleet that is going to complete the delivery of the ore to the Fort Knox mill. So yeah, no, we're not going to look at electric trucks. So it's a huge amount of capital, and in fact is they don't exist right now. It's an Elon Musk dream, and I'm sure someday Elon will make them. But now, in terms of just solid diesel prices, we have a tendency to buy fuel sort of a year ahead of time here in Alaska, and so because all of our fuel comes out of Seattle, and I'm talking about diesel fuel. So I don't expect us to have any significant increases right away. But I think over, that the fuel prices, remain in this $100 sort of a barrel oil price environment, we will see that increase sort of run through, I'd say, the latter half of the year, and obviously if it continues in the next year. But it's not immediate, because we've already got our fuel already stored. Now, and just to frame it, the transportation portion of our all-in sustaining costs is roughly a third, and roughly a third of that is related to fuel. The other 2/3 are the capitalization of the truck and the driver and the cost related to that. So it's not like that makes it 1/9 or 1/10 of our overall costs. So just to kind of keep it in perspective, it's a significant contributor for sure. And especially when you're transporting ore, and our whole DSO model relies on that. So it's something that we'll monitor, and and we'll give guidance when we have new numbers.
Awesome, appreciate it. Just because there's a lot of questions in this arena, I'm just going to throw this out to you guys. Where can people buy you right now? Where will people be able to buy you in the future? And why pursue TSX over maintaining TSXV, NYSE? Let's just talk about tickers for a few minutes and where people can buy you and what the strategy is for the future.
Sean, you want to take that?
Yeah, so you can buy us right now, CTGO, in the U.S. You'll be able to buy us CTGO on the TSX. Now, why big board versus venture? There's more indexes, more institutions that are be able to buy a TSX big board stock than the venture stock. So it's been proven with case studies that liquidity goes up, your investor exposure and reach is increased significantly. So it's very, very simple. You just have to remember one symbol, CTGO, and whether you're investing in the U.S. or Canada on the big boards, CTGO.
Perfect. No, appreciate that very much. Rick, one question I haven't heard in a very long time, but I'll throw it to you. It's about the bridge. Somebody wants to know if the Alaska Department of Transportation repaired bridges that had heavy load restrictions impacting Manh Choh's operations.
Yeah, so short answer is yes. There's been it was a lot of drama last year about that. It turned into a bit of a much ado about nothing story in that the reason this whole came about was the federal government didn't approve the state transportation plan, which meant that the state then had to sort of delay their planned maintenance of the bridges. When the Trump administration was elected, that was one of the first things the Trump administration did is just say, boom, here's the dollars. This was a political attack on our governor, but so glad to have all that drama behind us. But short answer is the trucks are running as per schedule, 24/7, 365, and that was a painful political experience in my view.
Oh, absolutely. And I will give congratulations to everybody who bought Contango during Bridgegate because you made it like an absolute bandit. So congratulations to that team. Somebody asked a question I've actually never encountered before, so I'm curious your perspective. They say Alaska is a known earthquake region. He wants to know, as an investor, how should he judge the impact of seismic events on underground mines?
Yeah, that's actually a good question. And the short answer is underground is actually one of the safer places to be if you're in a properly maintained mine, because that's something you do on a daily basis is you look for hazards. So short answer is you engineer for it. And Alaska definitely is a active seismic zone. I'd say actually all of Western North America is an active seismic zone. We engineer for it. And as odd as it might sound, underground in a well-maintained mine is a pretty good place to be.
Yeah, there you go. No, I appreciate it. Just curious. I think that's great. One question somebody asked is, are there any non-core assets of the combined company that you intend to dispose of, sell, et cetera?
Yeah, so I think that from the Dolly Varden side, the focus was on Kitsault and the surrounding areas, and so I'd say no on the BC side. But in Alaska, we have a number of early stage assets, and we have discussed and thought about spinning those out because they're not likely to fit the DSO model. So I'd say stay tuned for this space. We're doing some work on them this year, and I'd say we're going to make a decision probably sometime this year as to whether they remain a core part of the portfolio or whether we look to do something else with them. But there's certainly value there. They're good assets. They're all next to infrastructure. There's certain aspects of them that fit, but we've got a lot on our plate, so we might sort of high grade the portfolio a bit.
Yep. No, you guys keep busy for sure. That's something I've always known about Contango. Sean, I'll throw this one to you because I'm glad I got both of you on the call for this question. Somebody wants to know if you can describe the management structure of the merged team. What's the relationship look like? Who's on it? How are decisions made? Somebody just wants to know kind of how everything's going to go with the combined group.
That's a good question. One thing I would just want to add to the last point before we touch on that is, having that disciplined approach and having the appropriate amount of cash on treasury and cash flow to advance the four major assets. The other thing I want to say is there's an opportunity for Contango shareholders to get exposure, like depending on how we look to unlock that value of those earlier stage projects. We're now moving into a price environment that is supportive of exploration. So I think there's a way for us to monetize to the benefit of the existing Contango shareholder that portfolio. So I think that's something to look at in the future. In terms of management, look, the nice thing here, just like whether it's the shareholders, the cross-pollination of skill sets, look, I'm a marketer. Right, I'm a marketer, so in terms of the structure, Rick is the CEO, and the way I look at all these companies, and this is something that a lot of investors, a lot of management teams don't appreciate. The top of the pyramid is the shareholder.
Sure,
that's who really calls the shots. Then you've got the board of directors, and then you've got the CEO who reports to the board and is working for the board of directors. And so, myself, Rick, and Mike Clark, we will huddle up and we will make decisions as a group. But Rick is our CEO, but governed by the board and working for the shareholders. And it's really, when we had our all hands on deck meeting, Rick made an incredible point, which is the real value drivers of the company is the people you don't see on this call. It is people. That's the sites, in the offices. That's where the magic happens. And we've got a lean team, but we've got an incredible organization that is supporting us. And they really are the ones that are driving the value and creating the real magic.
Awesome.
I just want to add in, just on the board, I'd say, I'll use that term high graded again, but we've got a really solid board that is very mining focused. As you know, Contango came from an oil and gas background, and again, great. It's been great, very supportive board members, and that know a lot about resource development. But I think we've now kind of focused the board on a board that knows mining and understands what a mining company is and how do we grow it. So I'm really pleased with the board. We're actually meeting next week. And with the entire team, board included. So we're excited and to get the whole team together and move forward on executing the plan here.
Great, Sean. I got a marketing question for you from the chat. Somebody knows that before you've used the word pure silver play to describe Dolly Varden, and he's happy with the merger. He just wants to know what the base message you're going to be using to promote Contango is now.
Yeah, no, it's a great question. For me, from my perspective, I look at the great precious metals companies that have stood the test of time, and they're really producing multiple metals. They're polymetallic, right? And I think what we offer the silver investor is we offer them a lot of high grade primary safe jurisdiction silver, which is extremely rare. It's what made the Kitsault Valley project a true unicorn project. Having primary silver is rare, having it in a safe jurisdiction is even rarer. But if you look at some of our peers, and you take Hecla, you take Coeur, First Majestic, they're producing other metals. They're producing a lot of gold. So in terms of marketing, I think the key here is grade, jurisdiction, and silver and gold.
Perfect. No, appreciate that. A couple of quick questions. P. Sexton asked about 40 minutes ago, what's AISC right now for gold? I might as well give the Manjo confirmed number. But then what's anticipated AISC for silver at Kitsault?
Yeah, probably too early to put any numbers in Kitsault. So let's get the MRE out, and then we'll execute the plan to do the 40,000 meters of drilling. And by the end of 26 and in early 27, we're going to be focused on getting a preliminary economic assessment or initial assessment done. That'll give guidance on the plan to turn, as Sean says, metal in the mountain into metal that we can market and sell. So and then on Manh Choh, this year's guidance, we're guiding 40 to 45,000 ounces of gold production. I think we'll be at the higher end, and our costs are in the $19,000 to $2,000, all-in sustaining costs in the $19,000 to $2,000 range. And in terms of next year, guidance is 75 to 80,000 ounces of gold and $1,300 to $1,400 costs, all-in sustaining costs. So Again, the reason for the lower production and higher costs this year is the equipment, the mining equipment is focused on the transition from North Pit to South Pit, lots of pre-stripping going on at South Pit. So we have a relatively low cost or low production and high cost. We get the benefit of that in 2028 and 2027 and 2028, where we'll have much higher production and much lower costs.
Awesome. I appreciate that very much. Now, I know somebody asked, Sydney from the chat, said, Sean, they appreciate your comments on rebalancing, but I'm going to throw this question to both of you, but I will start with you, Sean. What do you think is the catalyst from here that drives the rebalancing for Contango? Just love to hear what you're thinking.
Well, again, I talked about some of the case studies of other mergers in the past, right? And I think, for some investors, we've had some turnover, right? There were some investors on the Dolly side that were here for a silver explorer, silver speculation. For Contango shareholders, I think for some of them, getting another development stage project, they're there for the production. So as we've turned over those shareholders throughout this time from proposed merger to completed merger, now we're going to go out and build a new shareholder base, and a shareholder base that wants to get exposure to high grade, safe jurisdictions, silver and gold. And so for me, in addition to things like a new discovery at Lucky Shot in the KM vein, good operational numbers, the exploration drilling in the Kitsault Valley, there's just an opportunity here. The market needs this name. There's a vacuum in the mid-tier space. There's a void, and that void has been built up because we went through a 15-year depression in the mining space. And now that Rick and I were gathering assets during a depression. I look back at the High Gold acquisition and the cost of bringing Johnson Track into the company. It was an incredible accretive transaction. And I think this transaction is going to age in the same manner as we look out into the future. So the real opportunity here is just to educate the precious metals public that we've got a new name. This is like putting yourself in a time machine and investing in Hecla, 5 years ago, right? We've got a 5-year plan that's going to deliver, 200,000 ounces of gold production. And then, we'll be turning that corner and looking at 6, 7, 8 million ounces of silver production to complement it. And it's an absolute rocket ship. So, really the key here is going out and sharing that as we explore, as we develop, and we continue to produce.
I'll just add that we have a marketing meeting on Friday, and it's a busy schedule. We're going to be road warriors on an airplane. So we want to do a lot of marketing. We want to get this story out.
That's great. I hope you get used to the ice cold brie that they serve on planes. It's fun every time you get used to it. But gentlemen, I know we're coming to the end of the hour. I'd love to give you just each one last minute to close off each on what you're most excited about for this year. I know we've gone over the million things that are keeping everybody on their toes. But Sean, I'll start with you, and Rick, to close us off. Just what are you most jazzed about? What's keeping you up with excitement for 2026 Contango Silver and Gold?
Well, again, for me, it's, I've been out there pounding the pavement for the last 6 years and bringing in a lot of incredible shareholders to what was a primary silver name. And what I now get to do is introduce that network that I've been building for the last 2 decades into some very, very unique special assets in Alaska, and a combined company that really is a platform. When I look out, this is a company that could be around for the next century in terms of these districts, this potential. We're just scratching the surface. So if I were to sum it up, it's exploration, it's development, it's production, it's the uniqueness of having all of that in Northwest British Columbia and Alaska. So we've got a very, very busy calendar. I'm just grateful that I'm not doing it alone, that I've got a team that I'm working with, because we've got different team members in different cities at the same time. And it's going to be busy. It's going to be fun. And we're finally in a market that's starting to pay us for this, right? These projects are now incredibly profitable, more profitable than I ever dreamed of it, and I'm just glad that Rick and I were out there actively acquiring the portfolio, advancing it, exploring, developing, and now we've hit it, I think, at the right time in the cycle.
Awesome. It's payoff time. And Rick, I'll leave it to you for a final word.
Yeah, no, I mean, I'm an exploration geologist by background. That's my passion. That's what I love to do. So, when we've got, north of 50,000 meters of drilling going on this summer, it's going to be a hell of a lot of fun. Exploration's fun. Finding new high-grade veins at Lucky Shot, that's fun. There's just it's the passion of exploration. And, I've always loved, the saying that, without art, there's no science, and without science, there's no art. And that's exactly what our business is, and that art is part of that passion. It's just how do I build this? How do I create this? And creating that future for the company is, I think, as Sean just outlined, we're incredibly fortunate. We're incredibly blessed with governments that support mining finally, and with a team and the capital and the goods, the 4 districts. To explore. I couldn't be more pleased with where we are as a company.
Awesome. Appreciate it. And Marcel in the chat just increased his holdings during the event, so thank you, Marcel. And with that note, but Rick and Sean, thank you so much for letting me grill you and getting through all these questions. Everybody in the room, I know there's 5 or 6 questions I didn't get to. I'm going to make sure the teams get them so that they can get back to you as soon as possible. But thank you, everybody, so much. There's so many of you in the room today. Thanks for taking time to spend with us. And Rick and Sean, thank you guys for letting us grill you.